Okay, supply and demand is kind of like the overall idea of the market. Now, we are not on the right futures. Okay. So a lot of the times, the supply and demand, you're going to hear it in plenty of different ways. A lot of people have their own interpretations of what supply and demand is in the market. There's like fundamental ways to look at supply and demand, such as how much product there is in comparison to how good the economy is and how much people are buying, things like that. Um, it's the same thing as if you buy a pair of shoes. So a pair of shoes first comes out, the new LeBrons come out, everybody's buying them, right? So when they first come out, they're going to be more expensive. When a new video game comes out, it's going to be most expensive at that point. And then it's going to start to decrease in value because not as many people want it anymore. The people that wanted it already bought it. So the value starts to decrease. So the demand of the product begins to decrease. So what that means is the price is going to have to decrease as well because nobody's buying it up. So that's the fundamental, basic, very, very basic idea of supply and demand. Supply and demand in the charts in turn is very subjective to different people. But the main idea is people are looking for some sort of big move. And that's kind of the basis of the entire idea of supply and demand. We're looking for a balanced period and then an imbalanced period. A balanced period would look like a consolidation. So a balanced period would be considered this right here. That is a balanced period. Okay. Another balanced period would be here. Another imbalanced period would be right around here. So these are all balanced periods. And then we have imbalanced periods where we move in a trending direction. So if you keep up with all of these webinars that I'm doing or the classes that I'm teaching, they kind of all come to the same conclusion, the same concept. There's consolidations, there's trending markets. It's just another word to put in each of them. Like they're different ways to put a label on each of these things, but a lot of the times they're the same things. Like this is a balance period, but it also is a consolidation. It also is a range. What else? I think that's it. But you get the point. There's all these names for the same ideas. People look for consolidation breaks. This is what they would call a supply or demand zone. But there's plenty of different ways to think about it and understand it. But the idea that you want to understand is that we're looking for a big move. And what you'll notice is like we're looking at the same things as we go through every single class. It's like you're looking at consolidations, trends, aggressive moves, turning points. They're pretty much everything we're looking at in terms of interesting places to get into trades. They're all based off of aggressive moves. They're based off of high reaction moves. And so how I like to find that is the line chart. So I think a lot of people know what supply and demand is, but I'm trying to hone in the idea of what the purpose of it serves, right? So when we look at this, we think of supply and demand as kind of like a zone more than a actual price or price. So when we're looking at supply and demand, how you want to draw this is how I draw it is I look for where the move initially started, where the origin of the move, where it started happening. And then I go and look for, then I like to take somewhere between the last candle or just straight up the candle that had the huge move. I like to take that wick. I like to take the before the big move happened. That's what I'm looking for. I don't really necessarily have rules in terms of that, but you can see how it kind of can play out here. You can do this on any time frame, but I will suggest that the bigger your zone is, the harder your life's going to be. So if you trade on a smaller time frame or create your zones on a smaller time frame, they're going to be smaller and it's going to make your life easier. So the easiest way to point out these supply and demand zones is looking for major turning points. So let's just go ahead and identify a few of those there. Okay, so there's one. There's one. I'm basically plotting the highs of these turning point moves. I'm plotting the highs or the lows, depending on which scenario it is. Okay, so there's one. And we can look at all these examples and how they work out, right? Which we will. So where's my drawing tool? There's one. There's one. Okay, so now you get the idea. So we have all these different supply and demand zones. So now let's draw these out. Okay, so let's take the candle before the wick that I had. Let's just look at the type of reactions we get within this. So basically what I did was I took the wick of the previous candle before this move happened, basically the highs, because we came in and rejected there. I don't use supply and demand all the time. I really just use it. I don't use it a lot. So I don't have a specific rule on where I'm going to draw it, but a lot of times it's going to be the wick of the nearest candle around it, right? That's just what I like to do because I think that's the dead bottom. That's kind of the final test, if you want to put it that way. The final test of if we break through this, okay, then we obviously have broken through all of it, right? Okay, so now if we can look at this, we draw that one and we'll draw this one here too. We'll take the wick of this big candle here. There we go, close enough. Okay, so there's the wick there. So now you can see how these can kind of play a role and how they may factor into your trading. So here's an example of a supply zone. Here's a demand zone. This is where buyers step in. This is where sellers step in. Okay, I don't like to use a zone after it's been broken, but that's just personally my own way I do it. So like if it's broken, I'm not going to use it. I don't do the supply and demand flip. It just doesn't make sense to me fundamentally. So I don't do that. I just look for, because the whole idea is that there was a big move here. And when it comes back up to this area, there's going to be people that got in at this point that are probably going to sell out at break even, but there's also going to be people that are going to step in to keep this high here and not let it go to a higher high because they want to control the trend. That's what market makers will do. And then there's also sellers that will start to pile into the position because they also believe that it's a demand zone. So there's like 4 or 5 different reasons why people would end up getting in at these spots. But if it broke above and came back down, it doesn't really make sense that the buyer or the sellers would just flip to being buyers and start taking that position. It just doesn't make a lot of sense to me in terms of supply and demand, the concept. So, but looking at it this way, you can see there's a rejection here, there's a rejection here, and we got some nice moves here, but we're going to continue through and we'll plot out each of these, how they played out differently. So you can do it this way, where you have the one drawn out and you hold it until it's broken, or you can continue to redraw your lines every time there is a new one or there's a new move, right? So here's an example where I wouldn't call that, actually, that's not an example. I don't like that. Where I would put it actually would be more around here. Right around here. So see how small this candle is? I would just go ahead and take the whole candle. It's not that big of a candle. I personally don't do my supply and demand zone on a smaller time frame than the 1 hour. And I usually just do it on the 1 hour and 4 hour. And so, yeah, you can see all these different opportunities where we continue to reject. So like, if we continue to make this as we go, so how it would look is we can move back to here and I'll show you what I'm talking about. We'll keep that one there because price actually did that already. And then we're going to delete these. And we're going to actually walk through and pretend like we're actually trading the charts, right? And I'm going to be drawing out the supply and demand zone as we go. So we walk through, we're going to need this speed up. Okay, so now we have our initial. we have our initial move down, right? So there's a area of supply that we could draw out because we had a move here. And so now we're going to draw this out. And we're going to wait for it to come and have a reaction. So, okay, so now we have another demand zone because it's an aggressive move. That's the main point we want to make here. And I'm plotting that wick. We had an aggressive move up. And notice we came up to here. Let's see if we end up rejecting. Okay, we did. Now let's see what happens when we get to this demand zone. If we get there. Okay, so we're in, broke right through it. So this demand zone is now invalid. We delete it. Here, we still have a demand zone here. Continue through. We're in the demand zone. Okay, we bounce. We took a bounce. That's a nice play, right? Continue watching. So do we have any more demand that we did not draw here? This one got broken, so now it's invalid. Let's look at this one here, where we had this initial move down. Right here, we plot that candle. Let's see if we can get a move. Perfect. We get a nice rejection 1, 2, 3 times and get a nice move out of it. Continuing through, does it get broken? It hasn't been broken. We get a nice move to the downside, back to our lower zone. We go back up. Maybe. Okay, we don't go back up. Okay, so that's kind of the end of the sequence. So you can see how this works. So we drew 1, 2, 3, 4 different demand zones. So now there's a few things I want you to know on this sequence that we just went through. Okay, so notice how on the third time we came back to this demand zone, we broke down. That's because the demand zone gets weaker the more times the point is hit. So the more times that demand zone is hit, the weaker the less buyers are going to be there. The idea is when it hits a supply or a demand zone in this case, there's going to be buyers sitting there waiting to get their orders filled. That's what you're hoping for. That's what you're trying to plot out. That's the ultimate idea. You're trying to figure out where people have buyers or where buyers have their orders set so you can get in during that area for a bounce. As for the short side, you're hoping that people have sell orders sitting here, or they have stop outs, whatever it is. There's a majority of reasons, but the main idea is that people are going to step in and start selling here. Once it's broken, it's invalid. But as you can see, the more times we come to this zone, notice how the first time we came to the zone, we had a nice bounce almost right away. But the next time we reached it, we had a small bounce and then we ended up breaking through. That's because the zone became weaker. So now we actually have another one down here. Let's see if this holds it. Now we are in a downtrend now. So that is something you want to keep in mind. So let's see what it does. And it chops it up. Okay, so this ends up being invalid. And I will give you a good rule of thumb. Just trade supply and demand zones with the trend. Like I can understand you going short here because we refuse to make a higher low here, or we refuse to make a higher high here. So it makes sense to short here. Like I wouldn't say that's a bad idea, but we haven't broke trend either here. So it wouldn't be a bad idea to go long here either because we didn't necessarily break the uptrend. This never made a higher high, so this is the low that we're paying attention to in terms of market structure. If you don't know anything about that, you definitely need to learn about that because it's very useful in terms of using supply and demand and following market structure. Okay, but you can see we continued, we couldn't make higher highs, and I actually even forgot to, but we couldn't make higher highs, and so now naturally we can short these fails to go higher, right? Because now we know the trend is weakening. Now the trend actually broke when we broke this structure or this demand zone. Okay, now we're in a new demand zone. And pretty much how we're going to plot this is, now a question probably what someone would ask is, would I go long here? No, I would not. If it came down to this level, if it came to, let's just see if it does. See, you don't want to go long in these demand zones that when we're in a downtrend, it just doesn't make sense. What makes sense to me is to short the supply zones. Strong reaction candle, liquidity grab, came back down, rejected, boom, we're out. And a breakdown. So the idea is you want to play with market structure. It will save you more times than it won't. Okay. Now I don't play supply and demand flips, but we can see if this works out. See, and it didn't. That's why I don't do it. But look, this is still a demand zone, right? Because it never was broken. We had a liquidity grab, it never held though, so it doesn't matter. So it's just a liquidity grab. Market makers trying to fake you out. Okay, so here's another win in the books right here. Hit that supply zone, and boom, we had a breakdown. Okay. Let's see if we can find another one. Probably right around here. That move right there. Right there. Okay. Let's see if that has any good reaction. If we get a rejection that we would like to see. Look at that. See if it can hold. I mean, we got a small move down, but nothing worth noting. Here we go. Let's see if we get clogged up. Notice that we started to get clogged up here. We had trouble. We had 2 hourly candles where we couldn't break above. But now you can see structure starting to change. Once we broke this here, you shouldn't have gone short because that was the most recent lower high that created a lower low. So like if we're looking at this in sequences or in a market structure terms, this is a lower high. Here's a lower low, lower high, lower low, lower high, lower low. And then we broke that here. So there's no reason to look to be going short here. So now at this point, market structure has changed on the lower time frames. So what are we doing now? We're looking for demand zones to go long in. But we also have this. Nope, because that one was broken through. We're not going to flip. We don't flip it. So now we're just looking for demand zones to take. Ooh, oh, now we're caught up to live. But okay, so does this make sense? Anybody have questions on how I did this, how I drew it out, how I went about doing this? Any questions? No, this all makes sense? Nobody? It all good? Okay. So now that we've got that covered, I want to get across the idea of that. The most important thing is you're looking for aggressive moves. When you can plot the aggressive moves, then you're going to be able to do or be able to trade much better reaction. Like the reactions to your trades are going to be much better. You're going to get much better trade opportunities. Like, see how this was a big reaction here? We had a demand zone or supply zone. And we had a big push down. You can see as soon as we came back up to that area, we had a nice push down again, all the way to actually lower than here. So if I was going to trade this or how I trade this on my own is number one, we'll give a little step by step. Number one, big aggressive moves. The wick or previous candle wick body. Okay, then what are we going to do there? Take trades that only follow market structure. Okay. 4. What do we take? What else do we need? Zones are gone after broken. Exclude Okay, and then that's it. That's all the rules right there. Those are all the things I would use in terms of trying to break this down. Okay, so that's it. That's the idea, guys. That's supply and demand. Pretty simple. Almost the same idea as support and resistance. Gives you a little more flexibility, but it also makes it a little harder because it's a zone rather than actually a pinpoint spot, like pinpoint price. Makes it a little more difficult. But that's the idea. That's how this works. And that's really all I got. You guys have no questions. You're all good in terms of like plotting these aggressive moves. What time frame do you usually take entry? Uh, I I flip between the 15-minute and the 3-minute, and that's depends on the time frame that I got the trade idea from. So like if I get the trade idea from the hourly, I use the 3-minute and 15-minute in combination. When market opens in the morning, I don't trade market open. I just wait. I wait for it to do its thing, and then I take an entry if I see an opportunity. Can we see another chart? Okay, what chart you thinking? What do you want to see? Apple? Okay. Now let's move back here. Okay, now, so when we take a look at this, get this volume out of here. Okay. So let's look at this. So as you can see, let's see if we can find, here's a supply zone. There's one aggressive move right there. Just plotting that way. Aggressive move right here, but I'm going to plot. I'm going to get both of those. I'm going to get both that and here. You don't need to. Okay, fine. I won't do that just for the sake of purpose of, you know, for this learning example. Okay. So now let's continue through here a little bit. Oh. Okay. Well, as you can see, neither of those worked, right? We broke down. You can see we rejected that one there. Let's see. Okay, so I would say this is still valid. I'm marking the supply zone, or demand zone, but I wouldn't be taking this trade just because I wouldn't. It's against market structure. Broke down. You can see we retested it. So now we're still in downward structure. So what we're going to do is now we're going to take this here. On this. Broke right through it. Retest, breakdown. Okay. Hold on. Okay, so you just wait for confirmation. Yes. I don't just enter it when it gets to a price. I wait for confirmation. This is a bigger zone here. Super reject. Wow, this is so choppy. Okay, price is getting away from me now. Wouldn't be trading that, just watching it. Liquidity grab. Still holding as demand. Turning point. If you have trouble drawing these out and getting these, if you have trouble drawing these out, just take out the line chart. It'll make it a lot easier for you and a lot easier to see it. And it will make it more simple. Because like trading like this, we're gapping up here, we're gapping down, we're gapping up. It's wild price action. So can we break it? So we had a fake out. We had the break. Let's see how high we push after the break. I would have entered on the 3-body wick for puts. Where? Here? Yeah. Well, did you? I don't know. Did you? Because I would have entered calls here if I would have known where it was, you know? Yeah. Well, all right. You guys got any questions here about this? The main point is you're looking for turning points, and your life is going to get a lot easier if you use the line chart. And if you don't, shame on you for not using it. But because it's going to make your life a whole lot easier. Price action is a lot easier to read. Pinpointing support and resistance, trend lines, supply and demand zone, things like that. It makes your life a lot easier to use this or to pinpoint those. And I've preached this probably since the day I've had this Discord. Use the line chart. It's going to help you way more than it won't. I use the line chart every day. Anybody have questions? Thank you, Carlitos. That's very nice. I don't know you, but I'm sure you're an amazing person as well. Any questions? We good? That's all I got for you guys this time. Alrighty. I will see you guys. Thank you for coming.